Welcome back. We're going to talk about real estate strategies, the ultimate guide for successful deals, part one. Subject two is a real estate investment strategy that involves acquiring ownership of a property while leaving the existing mortgage in place. Let's discuss the subject two strategy thoroughly. How subject two works. When investors purchase a property subject to the existing mortgage, they agree to take over the property ownership and management, but don't assume the responsibility for the underlying loan. Let's discuss the subject to strategy thoroughly. How subject to works. When investors purchase a property subject to the existing mortgage, they agree to take over the property ownership and management, but they don't assume the responsibility for the underlying loan. The mortgage remains in the seller's name, and the investor makes the mortgage payments on their behalf. This allows investors to control the property and potentially earn rental income or acquire growth without securing new financing. Benefits to subject to. The subject to strategy in real estate investing offers several benefits to both the investor and the seller. However, it's important to approach this strategy with a thorough understanding of the risk and the ethical considerations. Here are the key benefits to the subject to strategy. No new financing. One of the primary advantages of the subject to strategy is that the investor can acquire the property without needing to secure new financing. This is particularly beneficial for investors who have many limited access to traditional loans due to credit constraints and other financial factors. Avoid closing costs and loan fees. By not obtaining a new loan, investors can avoid many of the closing costs and loan origination fees associated with the traditional mortgage financing. This can lead to a significant savings up front. Quick transactions. Since there's no need for a loan underwriting and approval process, subject to transactions can be completed relatively quickly. This can be an advantage in competitive markets or situations where sellers need to sell the property promptly. Cash flow and equity buildup. Investors can acquire properties subject to the existing mortgage and can benefit from a positive cash flow if the rental income exceeds the mortgage payment and the expenses. Additionally, as they make the mortgage payments over time, they can build equity in the property, potentially leading to an increased net worth. Potential for profit. But if the property appreciates in value, the investor can benefit from capital appreciation upon selling the property in the future. This potential for profit exists even though the investor didn't assume the original mortgage. Flexible exit strategies. Investors have multiple exit strategies with a subject to strategy, such as holding the property as a rental, selling it to another investor, or even refinancing under their name to mitigate the due on sale clause risk. Limited liability for investors. Since the investor does not assume the liability of the mortgage, their personal credit and assets are not directly tied to the property mortgage payment. This can provide a level of protection in case of financial challenges. Portfolio diversification. The subject to strategy can be used to add properties to an investor's portfolio without overextending their credit or financial resources. This diversification can help spread risk and potential increase in overall return. Opportunity to help distressed sellers. For sellers facing financial difficulties or needing to sell quickly, the subject to strategy can be an attractive solution that allows them to transfer ownership while avoiding foreclosure or a distressed sale. Creative financing options. The Subject to strategy showcases the creativity and flexibility that is possible in a real estate investing. It's a way to structure deals that benefit both parties and addresses unique circumstances. Access to existing loan terms. Investors can take advantage of favorable existing mortgage terms, such as low interest rates or long amortization periods, which may not be available in the current lending market. While the subject to strategy offers these benefits, it's crucial for both investor and seller to approach the strategy with a full transparency and legal compliance. Investors must ensure that they have a clear understanding of their responsibility and ethical obligation, as well as the potential risk before engaging in the subject to transaction. Now, let's talk about risk and considerations. The subject to strategy in real estate investing comes with a set of risks and considerations that both investor and seller need to carefully assess before entering into such a transaction. Understanding these risks is crucial to making informed decisions and mitigating potential negative outcomes. Here are the key risks and considerations associated with the subject to strategy. Due on sale clause. Risk. Most mortgage agreements include a due on sale clause, allowing the lender to demand full repayment of the mortgage if the property changes ownership. While enforcing this clause is the lender's discretion, it is a significant risk. Consideration. Investor must be aware of the due on sale risk and the understanding that the lender could theoretically call the loan due, requiring either paying off the mortgage or negotiating with the lender. Seller's credit risk. If the investor fails to make the mortgage payments on a property, it could negatively impact the seller's credit. Since the seller's name remains on the mortgage, they are ultimately responsible for the repayment. Sellers should be fully understanding of the ongoing financial responsibility and potential credit impact before agreeing to a subject to transaction. Ethical considerations. Investors must act ethically and transparently throughout the transaction. Not fully explaining the risk to the seller or misleading them about the arrangement could lead to a legal and ethical complication. Both parties should be fully informed about the potential risk and the benefits of the subject to strategy. Sellers must fully consent to this arrangement. Legal complications. Incorrectly executing subject to transactions could violate mortgage terms or local laws, potentially leading to a legal consequence. Investors should consult with their real estate attorney to ensure that all documents and procedures complying with this legal requirement and protects both parties' investment. Lender notification. Lenders may require notification when they are in change of property ownership. This could trigger their review of the mortgage terms and potentially lead to an enforcement of the due on sale clause. Investors should understand the lender's policy and local laws regarding notifications when transferring property ownership. Financial responsibilities. Investors take on the responsibility of making mortgage payments and managing the property. If the property doesn't generate enough income to cover expenses, the investor could face financial strain. Investors should conduct thorough financial analysis to ensure that the property's cash flow is sufficient to covering the mortgage payment, property management, and potential unforeseen expenses. Long-term commitments. Subject to deals with a long-term commitment. If the market conditions change or the property becomes a burden, investors might face challenges in existing with the arrangement. Investors should carefully assess their long-term plans and exit strategies before entering into a subject to transaction. Lack of control over interest rates. Interest rates on the existing mortgage are determined by the original borrower's credit profile and market conditions. If the interest rates rise significantly, the investor's profitability could be impacted. Investors should assess the potential impact of the rising interest rates on their cash flow and financial project. The subject to strategy presents several risks and considerations that both investor and seller need to be aware of. Careful consideration of the potential risks and benefits will help you make an informed decision and create a successful subject to transaction. Stay tuned for part two. Thank you for watching, and please like, subscribe, and share if you find this information valuable. Thank you.